If you are not taking risk as a trader, then there is no potential gain as well. But there is a potential for losing also. Now, some trader also afraid to take a risk. Therefore, they're stuck in a level where there is no gain as well. Now, the traders are operated by two major emotions. Emotion of fear. For those who operated by fear, afraid to take risk, there is no gain. Also, there is an emotion of greed which lead traders to take higher risk. Sometimes they gain, but ultimately long term they lose. So what is the balancing point? And this is what we will be discussing in this video. Now, what if I tell you that there is a way, there is a balancing point where some trader consistently making profit with a minimum risk or with almost no risk? How can you find that balancing point? This is what I will be discussing in this video. Now, simplicity is the key. Now, until you find this balancing point, either you are on the left or on the right, either side is at risk. So if you really want to manage that risk, learn the proper risk management plan. I have divided them into four important components. Everyone, either you are a complete beginner or an advanced trader, this is the must watch video for you. So before I begin in-depth understanding of how to find the balancing point as a trader, make sure guys you give a thumbs up, smash the like button, and also subscribe to the channel if you haven't done yet. So without further delay, let's get started. So either you are a beginner or an advanced trader. This is a very important video, as I will be simplifying how to follow ultimate risk management plan as a trader. Now, simplicity is the key. So let's understand this ultimate risk management course, starting with understanding the risk reward. Now, some trader ask me, is it possible to trade on 1:1 reward to risk, or do I have to trade on 3:1 reward to risk or 2:1 reward to risk? The answer is every risk reward is okay as long as you understand the probability. Let me show you in the real chart how to understand probability and fuse it with your risk to reward. Okay, today, so let's understand the probability and risk reward with these three simple examples. Let's say you have a strategy which operates on 1:1 risk reward. That means that every time you open a trade, you gain $100 if win, or you lose $100 if lost. In that case, if you take with that strategy 10 trades, and you need to have at least 6 winner to remain profitable over the long term, as 4 loser will take you 400, but 6 winner will give you $600. So ultimately you are $200 profit in that strategy. Now, it may come almost 10 trades in a row as a losing trade. We need to think about 100 trades or 50 trades to gain that profitability over the long term. That is why backtesting is key. Now, if you have a strategy that is higher reward, that means that if you are operating with a strategy with 3:1 reward to risk, that means that each trade you are taking $100 risk, but when you are taking the winner, it's $300 winner. In that strategy, you need 3 full winner out of 10 to become profitable, as 7 trade will take you $700 if you risk per trade $100, and free winner will give you $900. So you are ultimately profit $200 after this 10 trades. Now, how about 5 is to 1 reward to risk? Now, with that strategy, if you take 20 trades with $100 risk per trade, then you need only 4 winning trades to become profitable over the long term, as 16 trade will take you $1,600, but 4 winner will give you $2,000. So over the long term, you are $400 winner after these 20 trades. So now the question is, which risk reward is optimal? Now it is completely depending on your back tested results as well as on your strategy. As long as you stay on a proper edge, you are winner. The most important part here is to maintain a fixed risk per trade, which is come down to the second component of finding the balance as a trader. Now, the second component of finding the balance is lot sizing. Guys, I cannot emphasize more than this because I saw that most traders are lazy. They don't want to, calculate the lot size. They just wanna trade on fixed lot, but that doesn't work. Why? Let's understand it. Why it is so important for you to do the lot sizing for each single trade. Okay, today, so simple way to understand lot sizing is absolutely important. Now let's take these two examples of two trades that you have taken now based on the 1:1 reward to risk or different reward to risk. Now if you are using the fixed lot, that I see that most traders comfortable on trading on a fixed lot. Now the problem will be happen if you are trading with the fixed lot is that if you are taking the same trade over and over again, quite a few trades, then probably a trade that you have taken has, as an example, 10 pip stop loss, and each pip that you risk is 10 lot, and therefore after you opened the trade, probably it has gone back up and then hit your stop loss. So if you traded that one lot and you had a stop loss hit, then you got minus $100. But the next trade is a very high probability trade. Probably you have taken that one as well, which has 8 pip stop loss. Now if you trade the same strategy with one lot sell, then even this trade is winner. Your potential win is $80. Now even if you have a high winning rate, if you are not fixing the same lot, that is with the same risk per trade, even if you have a high winning rate, long term you will be a losing trader, because even if you have won one trade and lose one trade, but ultimately your account is in drawdown. Therefore it is absolutely important to fix the lot size so that each trade carries same amount of risk regardless of the stop loss pip that can be adjusted using the lot size calculator. Now, another important component of finding the balance is understanding currency correlation. Now if you are coupling up quite a few trades together, for example euro dollar, British pound, US dollar, gold, as well as AUD, USD all together, then you might be thinking that I'm risking each instrument 1%, but at the end of the day you might be risking 5% or 10%, as when one currency pair such as the AUD, USD is going down, now you might see that euro dollar, British pound, US dollar, all of them moving in the same direction, as all of them are USD pairs. So it is very important that as a trader you keep eye on currency correlation, not doubling up the same currency or not trading them in opposite direction. Now the fourth or the last component of finding the balance and understanding the risk management is understanding the paradox of winner. So what do I mean by that? Now if you look at our traditional way, if you look at a racing game, then you'll see that the who comes first is winner, but in trading who comes last is the winner. Now let's understand is with an example. Now let's say you have taken 4 trades in a row with 5:1 reward to risk. That means that if you are losing, you will be losing, as an example, $100, but if you are winning, you will be winning $500. Now if you are taking all of them in a row, then what will happen? Let's say the first trade you have taken, it has gone up and then has come back down, hit your stop loss. So to hit the stop loss, it will take only 25 pip move to hit the stop loss. Now the second trade that you have taken, for example, but you have taken 5:1 reward to risk, to hit the profit target, it will need to move 100 pip for this winner. And then you have taken another trade which also with few pip stop loss, which hit stop loss only with 15 pip move backward. And then another trade that you have taken which also hit stop loss only after moving 19 pip. As the pip with the stop loss is less, it takes less time to hit the stop loss. The trade that is winner was 104 pip, which takes a lot of time to go to the profit target. This is where most trader loses the balance. That's why it is important to find a balance, as the winner will come last. When all the trade hit stop loss, if you are holding on to the winner to the fullest potential, ultimately after all of this 4 trade, the last one will give you all the profit that you need from this single trade. Now this is the simplest way to maintain an ultimate risk management in trading. Combining with a profitable strategy, a trader can find a balancing point of higher risk or the lower risk to a risk managed trading system that can give a trader a long-term consistency in his or her trading. I strongly believe that, guys, you enjoyed this very important video on how to find balance by doing proper risk management as a trader. If you have any question, don't hesitate to ask using the comment section below this video. Now I'll see you very soon in another lesson coming up. Until then, stay well, stay happy.